Let's go back to David Blanchflower. I believe that you can hear me now, David, can you?
I can.
Good.
Hi, Andrea.
Hello
nice
there.
We've
been talking about the Monetary Policy Committee's decision not to raise rates today, and I wanted to know if you were on the committee right now, what would you have been voting and why?
Well, actually, I think I would have been with Adam Posen. I certainly would not have been voting for a rate rise. Mervyn King's called it a futile gesture, and I think that's completely right. I think I probably would have been voted for more quantitative easing with the economy slowing, and even based on the bank's very bullish forecast, inflation doesn't hit the target. So still, for me, the worry is monetary policy makers have to look down the road. They don't have to look behind them. So all this talk about inflation today, interest rate changes don't impact that. So I find a lot of the kind of conversations I've been hearing misplaced. I don't think that anyone much will have moved because the data certainly haven't changed, and if anything, they've got worse. So I think this is waiting and watching and probably being ready to do more QE. Rate rises aren't on the table. I really think the market's got it quite wrong.
And indeed, a rate rise at the moment with the UK's fragile economy might be the last thing that average people need, particularly when they look at the mortgages that they're having to repay.
Well, I think that's right. I mean, we've just seen the increase in VAT, which hasn't really hit hard yet. We've got to see more fiscal austerity coming, national insurance increases to come. And what's protected people, particularly all those on trackers, is that their mortgage payments have been relatively low. So then if you start to raise rates, it's going to have a really big impact on those folks, and it's going to have another hit on household prices, on house prices. So that's going to hit consumption, and consumption is really fragile. Consumer confidence is nearly as the low as it was in March 2009. The consumer is really scared. It's scared about what's coming, and if you make it even more scared, I think there's a danger you push the economy over the cliff. So you have to sit and watch and wait before all this fiscal austerity hits. It's not the time to be raising rates.
I wanted to ask you...
And Osborne, that's the last thing he wants to see.
Oh, absolutely.
Yeah.
I mean, it's clear that George Osborne would very much like to see the rates stay where they are. But
Right.
I wanted to ask you a little bit about this kind of consumer fear. Consumer confidence is very low. And does that create a cycle that really prevents the kind of growth that George Osborne has been telling us will get us out of the economic situation we're in?
Well, I think it probably does. If you look in early 2008, the big leader in was a collapse in consumer confidence in the US, which then led to a collapse in consumer confidence in the UK, which predicted a fall in consumption. So that's the great worry. People are fearful of unemployment. And then when you see an increase in the oil price, what are they going to do? Restrict a bit their consumption of oil, but pull back their consumption of other things. The government really needs to see a big increase in consumption. So if you see this spiral downwards again, that's a real concern. The consumer is really fearful. I look at those consumer confidence numbers and I'm very worried about them. And so should the MPC. Many of them will be, and I know Mervyn King is.
I wanted to ask you a little bit more about Mervyn King, your old boss, because there was a concern among many people that he was very, very close to George Osborne. In fact, that they were almost singing from the same hymn sheet too much. Recently, that doesn't seem to be happening. Do you think that there has been something of a division, a falling out between them? Or do you think that Mervyn King is just looking at these figures and he's got a different take on what's going on with the economy?
Well, I think when I read all of this stuff, I read his interview in the Telegraph, and it came to my mind, this is a little bit like herding cats. Mervyn King is certainly his own person. He did express a view about the fiscal deficit and what to do, but his views on the banks and about bankers' bonuses and so on certainly look to have diverged from Osborne's. And I think, in some sense, Mervyn was there trying to say he's his own man, and he's going to have his own position on things. So his independence, I think in a sense, columns that I wrote and other people wrote about, this compromised his independence. I think this is a reaction to it, saying, I'm independent, you can't box me in like this, I'm not going to do as I'm told. And the great worry was Osborne said, look, King's the great supporter, and now that's kind of been broken a little bit. It was always dangerous to sort of say the governor of the Bank of England is really behind everything that we're doing, because as soon as things start to go badly, the governor's going to separate, and that's what we've seen. So herding cats was the thought I had.
And I wanted to move on to Spain, because we've seen that downgrade today, and in a way it's come at an interesting time, because there was the Bank of Spain going to give us all these figures and tell us, give us a lot of transparency about what was going on. And before they came out, we've had Moody's saying, well, whatever they are, we think it's double that.
Well, I've been saying that, I think, on your show and lots of other Bloomberg shows about the worry I have in Spain. I think I was actually sitting on a Bloomberg show as the stress test all came out about a year ago, and they said to me, what was your reaction? And I said, those stress tests didn't look very stressful. I think there's a considerable concern still. I think, in some ways, I think Moody's were right. There's great concern about house prices in Spain. I mean, they had all those new houses built. So over a 5-year period, they built more houses, I think, than Italy, Germany, and France added together. And what we've learnt in this recession are new loans are bad loans. So it always looked to me that that was a sort of bombshell coming. And these reassurances have not really reassured anybody. So it's not surprised me that Moody's have done that downgrade. And my suspicion is we're probably going to see more. And, you know, we saw what happened in Ireland, where it was very difficult to price price what was happening in the banks, because, of course, the bad loans got worse and the assets that they had depreciated further. If this continues to happen in Spain, we're already seeing that the cost between Spanish and German borrowing is widening. Where do we go? I mean, do you think that we are looking at a sovereign debt crisis in Spain? Well, I think we probably are, partly because Portugal, Greece and Ireland, the rescues, in a sense, that have gone to those haven't really satisfied anybody. Think about Ireland, think of the election that's coming, and the Irish saying we're trying to renegotiate and restructure this debt, and the ECB saying no, we're not going to. Apparently Iceland this week, all the restructuring they've gone through, they've gone back into recession. So the thing that people don't seem to understand is that it's very hard to lump onto countries that are very indebted more expensive debt. So this is not an end of the matter, and the ECB trying to flex its muscles again and say, oh, we're going to raise rates. It's not about inflation, it's about financial crises, it's about sovereign debt, it's about ability of these peripheral countries. So I think this crisis is still, I think I've said many times, it's got legs, and the more you look at it, the more you think, do these folks get it? I don't think they really do.